Continuing to talk about precious metals. Yesterday we had a look at the longer term outlook for gold, and I got a few very insightful comments, and I'll reply to each of those comments within the next 1 or 2 days. Today I want to zoom in a little bit to look at a shorter term view to see what's going on with the daily cycles in gold. But as usual, before that, let's have a look at the US dollar. As these black zigzags indicate, I was expecting the US dollar to cool down into late 2021 and especially early 2022, which of course didn't really happen. But while missing on the levels, this zigzag is at least relatively close enough on the timings of these lows and bottoms. In either case, let's delete it and see what we are observing on a cleaner picture. It seems to me, with a couple of green days on the dollar, and given that the ongoing short-term daily cycle has just passed its usual duration at 64 days, the average duration is around 59 days, it seems to me that perhaps the dollar has given us the end of the previous short-term daily cycle on the 31st of December with a bit of a retest of the 50-day moving average. Looking at the 14-day RSI, we see that RSI came close enough to a lot of the previous short-term daily cycle lows over here in late October, early September and late July. So while nobody knows the future, of course, everything is based on probabilities, it seems to me that there is a pretty good chance that dollar is going to continue up for a while, perhaps only for a short while, as the intermediate cycle is getting quite long, meaning that it should probably correct down into the intermediate cycle low relatively soon. This, I would say, would be my 65% chance scenario for dollar, meaning that perhaps over the short term there might be some more pain in gold as gold is dropping down into the short-term daily cycle low as well as the intermediate cycle low. The ongoing daily cycle is now 20 days long. Usually these cycles last somewhere around 1.5 to 2.5 months. So as I've mentioned, perhaps another short while, another couple of weeks of downward momentum in gold, which will also bring us the intermediate cycle low. So perhaps a bit of a significant correction, even if potentially a short-lived correction. Some of the support zones that are likely to be retested is this 1760, which has been hit several times, as you see, all through autumn last year, and the next support zone below that is around 1730. That's the late September low. As I mentioned in yesterday's videos, it's very likely that this intermediate cycle low that's probably coming in the next several weeks will be a tremendous buying opportunity, perhaps for the end of this extended handle formation, for this huge cup and handle formation spanning all the way back from 2011. So that would be quite exciting to observe over the next several months. Looking at the 14-day RSI, we see that RSI hasn't really dipped into oversold area since the previous intermediate cycle low in early August. So one more swoosh down to scare everyone could create that, again, tremendous buying opportunity. Especially if that decline into the intermediate cycle low doesn't create a lower low, we could be looking at a trend change where these lower intermediate cycle lows roll up into higher intermediate cycle lows and hopefully higher intermediate cycle highs. But again, let me just remind you that nobody does know the future, and for what I know, gold might actually make a new marginally higher high as opposed to the end of last year, continue higher for 1 or 2 weeks before dropping down into that short-term and intermediate cycle low. So we do have to maintain some level of flexibility here. And lastly, let's have a look at the optimism index on gold, where I mark these intermediate cycle lows with vertical lines, and usually the intermediate cycle lows do come with the optimism index somewhere around 50 or below. Historically though, these intermediate cycle lows came with the optimism index around the levels of 30 rather than below 50. And again, there is no surefire way here to catch those cycle lows. As you see, the actual price low, as in let's say mid-2019, doesn't actually coincide with the actual low on the optimism index. Sometimes there is quite a bit of fuzziness in the bottoming out of this optimism index, as in mid-2019 and in late 2019, as well as in late 2021. We see the intermediate cycle low drop to a lower low as opposed to a higher low on the optimism index. And sometimes, of course, these intermediate cycle lows are a little bit more discernible, as in March 2020, late 2020, and early 2021. So looking at the optimism index right now, it's still slightly above 50. So with a bit of a decline over the next perhaps couple of weeks, several weeks, if this optimism index comes close to some of the levels of the previous intermediate cycle lows, somewhere around the mid 40s or below, that, as I mentioned, would be that tremendous buying opportunity. So there's a double short for you of a short-term outlook as well as the long-term outlook for gold. Let me know what you guys think. Perhaps over the next few weeks we should have a look at some fundamental valuation of the miners. We haven't looked at those for a while. Alternatively, if you have other interesting ideas, share them in the comments below. And for now, have a nice day and bye-bye.